All right, let's talk about something that can feel, well, a little complicated. Thai personal income tax. Our goal today is simple. We're going to break it all down piece by piece so it's not just clear, but maybe even a little less scary.
You ever wonder what actually happens to your money from the second you earn it to the moment you pay your taxes? Well, we're going to treat this whole thing like a journey. We're literally going to follow your income as it makes its way through the system step by step. Okay, first things first. Before we can even think about deductions or tax rates, we have to figure out what the government actually considers income in the first place. This is square one, the absolute starting point of our journey. So, what counts? Well, the Thai revenue code is, let's just say, very thorough. It breaks down all the ways you can earn money into 8 different categories. We're talking everything from your normal salary to freelance gigs to money from investments or rent. They've pretty much got it all covered.
Now, I know that looks like a lot, but don't panic. For today, we're just going to zero in on the big 3, the ones that apply to most people. Your regular salary, any freelance work you do, and general business income.
So, who actually has to pay up? It all boils down to one super important idea called the source rule. And it's simple. If you do the work in Thailand, the income you earn is taxed in Thailand. It doesn't matter if your boss is in another country or if the money lands in a bank account overseas. You work here, you pay tax here. Simple as that. All right, so you've figured out your total income for the year. Now for the first stop on our journey, and it's a good one, protecting some of that hard-earned cash. The tax system lets you subtract your expenses, basically what it cost you to earn that money in the first place. For almost everyone who earns a salary or does freelance work, the system makes this incredibly easy. You get to deduct 50% of your income right off the top, up to a maximum of 100,000 baht. And the best part? No receipts, no proof, no hassle. It's just a standard deduction you can take. But if you run a business, you get a choice. You can take that simple standard deduction, no paperwork needed, or you can claim your actual expenses. Now, going with your actual costs could save you a lot more money, but it means you have to keep track of everything. We're talking detailed records and every single receipt. A lot of people just go with the standard for simplicity, but if your real costs are higher, tracking them is absolutely worth it. Now, here's a key detail. That standard deduction percentage isn't the same for everyone. It really depends on what you do. While salary and freelance work get that 50% we just talked about, other professions, like being a contractor or certain licensed professionals, have different rates. Some can even claim up to 60%. Okay, next stop. We've accounted for the costs of our work life. Now it's time to get a break for our personal life. These are called allowances, and you can think of them as the tax system's way of recognizing your personal responsibilities and giving you a bit of a helping hand. And the cornerstone, the one that every single taxpayer gets, no matter what, is the personal allowance. It's 60,000 baht. You can think of it as the universal starting point for lowering your tax bill. And you just build on that from there. You can get more allowances for taking care of your family, like a spouse who doesn't work, for your kids, or for elderly parents. Plus, you can claim for things that add to your financial security, like your Social Security payments or life and health insurance premiums. And if you're wondering why the system does this quote really gets to the heart of it. Allowances are there to recognize that everyone's situation is different. They're designed to make the whole system a little bit fairer by accounting for your personal responsibilities. All right, deep breath. We've identified our income, we've subtracted our expenses, we've claimed our allowances, we have arrived at the climax of our journey, putting it all together to figure out the final tax bill. The entire system really runs on this one simple formula. Your net taxable income is just your total income minus those deductible expenses minus your allowances. That's it. Every single thing we've talked about so far feeds right into this calculation. So once you have that final net taxable income number, you apply what's called a progressive tax rate. This is super important. It means you don't pay one flat rate on everything. Instead, your income is taxed in slices or brackets. The first 150,000 baht, completely tax-free. The next slice gets taxed at 5%, the slice after that at 10%, and so on. The more you earn, the higher the rate on the top slice of your income. Let's make this real. Meet Mr. Somchai. He's an engineer, and he earned 1 million baht. First, we take his income. Then, we subtract his expenses and all the allowances he can claim. We follow those steps, and we land on his net taxable income, 751,000 baht. So, what does Mr. Somchai actually owe? We take that net income and apply those progressive tax rates we just saw. And his final tax bill for the year is 65,200 bahts. And just like that, the calculation part of the journey is done. But hold on, we're not quite done. There's one last leg of the journey, and it's a crucial one. We have to cross the finish line by officially filing a tax return and paying what we owe. So which form do you need? Luckily, it's super straightforward. If the only money you made was from a salary, you use the simple P&D91 form. If you had any other kind of income, freelance, business, you name it, you use the more detailed P&D90. Okay, and the last thing, and you definitely want to remember this, is deadlines. The big one, your main annual tax return, is due between the start of January and the end of March. But, and this is a big but for all the freelancers and business owners out there, you also have to file a mid-year return by the end of September to cover the first half of the year's income. And there you have it. That's the whole map. We've traced the entire path of the Thai personal income tax system from the first baht you earn all the way to the final form you file. We've laid out the entire journey. The only real question left is, now that you know the way, are you ready for it?